Bitcoin prices are slightly up just days after the fourth Bitcoin halving took place. For more on what the halving means for the cryptocurrency and those Bitcoin miners, we're joined by Kulyk, founder and CEO of SunnySide Digital. Taras, thanks so much for being here. Bitcoin prices above 66,000 today. Typically, we do see prices rally about 12 to 18 months after each halving, but we've seen such a run up in the price action this past year as we've seen these launches of the crypto ETFs. So how do you assess what's already been priced into the price of Bitcoin versus how much room there is to really run here?
Yeah, that's a great question. Multi-layer, actually. What we've seen over the past few months, really this massive rally that's come up to the halving, I think has been driven by a lot of macro, a lot of geopolitical instability. You look at the amount of capital flowing into the ETFs, that ETPs that were finally launched and approved by the SEC in the United States based on the courts getting involved. Really being the catalyst to a lot of that pricing upside that we've seen year to date, as well as over the past 3 to 4 months in 2023 at the back end. The confidence that we're seeing now really is in, I'd like to think, the developer and transaction fee activity that we've been seeing on the Bitcoin protocol since the halving. In fact, several different type of new protocols have launched on top of the Bitcoin network, which have been really driving the transaction fee value that's providing the economic backstop for the mining ecosystem that my company, SunnySide Digital, supports.
Taras, I'm also curious, just, listen, you know this space so well. Was there any kind of meaningful differences, Taras, between this halving and previous ones? Anything that kind of distinguish it, set it apart?
Yeah, massive. The key differences are really the adoption integration of Bitcoin into overall global portfolios. We're seeing massive sovereign wealth funds, ultra high net worth individuals, countries themselves getting involved in Bitcoin. And I'm not talking about El Salvador, Bhutan, but major global players are looking at Bitcoin as not necessarily an alternative to gold, but a supplement to gold, as we see the headwinds in geopolitical risk globally. What they've also really come to appreciate is that this truly is a decentralized, hard type of wealth store of value, really. And as the politics and risk and volatility continues to happen, Bitcoin does seem like a safe haven asset that is backed by the electrons that digital miners actually use to create new Bitcoin.
Where do you see Bitcoin prices heading to the end of the year?
I wish I had a crystal ball, but I would be very conservative in saying at least 100,000, likely to the 150 to up to 200,000 per coin itself. Scarcity has actually doubled since last week, where the halving went from 6.25 BTC created every 10 minutes to 3.125. So although the transaction fees are supportive of the digital mining ecosystem, the actual true commodity being created has, unlike the US dollar or other currencies that are continually printed, decreased in issuance. And so because of that, more ETFs are actually being launched globally. The price should have a very good backstop with the demand for the underlying commodity itself.
So, Taras, so you see us moving to at least 100,000. What would be the downside risk to the call, Taras?
The downside risk could be, large-scale liquidations from some of the previous bankruptcies, or call it the Silk Roads of the world. We do know that some of the FTX coins have been moving around, and from my understanding, actually the Silk Road BTC that was taken from the insolvency committee has actually started to be distributed. So if there are people that need immediate liquidity, they could certainly be dumping into the market. However, the risk for large-scale investors to dump into the market probably won't happen for at least another year and a half, just because of how fresh some of those allocations are. That being said, with a globally dispersed ETF ecosystem, I think the volatility that we've seen in the past of anywhere from 10 to 40% in a day are probably behind us, which is a good thing because this is an investment asset that is really maturing.
And Taras, you say there will be a surge in M&A activity within the mining sector throughout this year and next year. Why do you see that M&A uptick, and what names specifically do you think could potentially merge?
Yeah, so we've actually seen some M&A already. We've seen some M&A with Hut 8 USBTC, a Canadian company merging in with the US operator. Marathon and CleanSpark have been very aggressive in some of their asset purchasing. Unfortunately, there's still some public companies out there that look like they could be acquired or rolled into a larger operation. Folks like Mawson, Applied Digital, Stronghold, they're all been under significant stress and pressure. Argo as well could potentially be an M&A target, or even like a company that's used for reverse takeover for access to the public markets. The reason this is happening is because, again, this sector really is maturing. And what maturation provides to typical industries is consolidation of the number of players. We're going to go from 20 to 30 public market companies to maybe 10, 15 higher quality at scale companies. And we're actually seeing this in the services sector that supports these large data center operators as well, because they'd rather work with a large at scale service provider for their needs, which are approaching a gigawatt of power utilization, than small mom and pop shops that are 10, 15 employees. And so that's something that my company, SunnySide Digital, is actually working on quite actively right now, is trying to consolidate the services and support space as well for the large data center operators.